Hello, my name is Darren, and we are members of something called the International Business Structuring Association, or IBSA. Essentially, it's a network of professionals that serve clients, private clients, so families that are exposed to multiple jurisdictions and they're running businesses, entrepreneurs. So it's not just restricted to tax, even though we're going to talk about tax. It'll be like investment migration, IP lawyers, insolvency, just anything to do with what the family will go through as they cross borders. And with that, I'd like to introduce you to the panel. Jose, you're going to start from your side and introduce yourself.
Thanks everyone to join this, and thanks Darren and Skipper 80 also for our participation. I'm a tax partner in Squire Patton Boggs, based in the Madrid office. I do international tax, even though I could sound partly American. It's my mom's American, my dad's Spanish, and I'm actually probably the only one not talking about U.S. taxes here, but some of the additions around that, which is always great to hear. Everyone living outside of the UAE, like myself, is excited to come to a place where Texas is a friendly environment for Texas. So you got to stay away of our tax network around how the trends, the difficulties around kind of keeping the taxes low, and especially with the U.S. citizens. So happy to be here and try to contribute to this discussion.
My name is Jimmy Sexton. I'm the founder and CEO of Esquire Group. We provide international tax and wealth planning services to affluent multinational families and help them minimize their taxes and pass their wealth to the next generation in a tax efficient, organized manner.
My name is Vince Trong. I'm based here in Gate West with a company called GSB Capital. I'm from California. I'm an American CFP, so I do financial planning, financial modeling, asset management for clients, and I've been here 16 years now.
Finally, we said we'll make a few comments on asset protection. Jimmy has a really popular podcast dealing specifically with asset protection. If you don't know, you can subscribe to him. Jimmy, you want to kick it off?
I think there's two things that I would say on it. I think especially when you have any sort of assets that you're trying to hold long term for multiple generations. I think a lot of people always think of the asset protection just for themselves. Like if you have, let's say, for example, a patriarch that generated the wealth, I think a lot of time when you talk to them about asset protection, they only think in terms of themselves, right? They don't think about putting it in a structure that's going to protect the kids from themselves, that's going to protect it from their kids' spouses, that's going to potentially, and this is one of the things that I talk about a lot, is this concept of burdening the next generation with the wealth, right? Because what I think a lot of people don't think about is if you have somebody that dies and has a couple of kids and they leave each one of these kids, let's say $10 million, you know, that's something these kids are going to have to think about in terms of their lifestyle for the rest of their lives, right? They're probably not going to want to move to Spain and pay tax on all the income that's generating, potentially pay a wealth tax and all this type of stuff. They're probably not going to want to move maybe to the United States, especially if it's invested in foreign companies or something like that, and have all the reporting and everything that goes along with that. With every relationship they get into, they're going to be thinking about it. And so although it is obviously something very nice to have $10 million, it also does put some restrictions on your life. And I think that the older generation is doing the younger generation a much bigger favor by wrapping this into some type of a structure where they don't own these assets outright, but they can benefit from it in the form of like trust distributions or stuff like that. Gives them a lot more freedom of movement around the world. And then I think that there's a lot of consideration that needs to be given to that.
More of a question for even them, because now, I mean, leading into these asset protections, I'll comment how the European angle on the trust, but I'm saying I work some family offices here as well, and there seems to be a lot more interest in ADDM trust.
Most foundations.
Yeah, how is that development for the asset?
Yeah. So it's actually really interesting. So I mean, I think that the DIFC, I've probably set up trusts and foundations in just about every trust and foundation planning jurisdiction that has them over the last 20 years. And I think that the DIFC's trust law, which was just updated the trust and foundations law, which was updated last year, is probably the most modern trust and foundations law out there, not only in terms of the amount of asset protection that it provides, but also in terms of estate and succession planning. And I think one of the things that the UAE has done very well is to make laws around how this applies to Muslims, for example, because there was a lot of questions about whether Muslims could give assets into a foundation, have those be out of their estate, not subject to Sharia distribution. And then the Dubai passed, or the UAE passed the family business law that clarified that is in fact the case. And I think one of the biggest things that the UAE has done to really try to you show that it's at the forefront of trust and foundation planning, is foundations are taxed as companies in the UAE, so they'd be subject to the 9% corporate income tax. And a lot of people, and especially with local assets, a typical structure in the past has been like, BVI companies that own local companies that own local assets. And a lot of these structures were set up in the past for purposes of succession planning. But at that point in time, the income that these companies were generating wasn't subject to UAE income tax, right? So if you own real estate, for example, in the UAE personally, and you're renting it out and receiving rents, as an individual, you're not paying tax on that. If you sell a property, you have a capital gain, you're not paying tax on that, right? But if you have a structure set up that's owning these assets through companies, and it's now these companies are receiving rents, there's tax. Well, they've now, as part of the tax law, if the foundation's drafted properly to be classified as a family foundation, you can sit it on top of the structure and make an election for it to be treated as tax transparent. And then you can elect actually the subsidiaries to be taxed as tax transparent, meaning that you essentially, any income that wouldn't be taxable in the hands of an individual is not going to be taxable in the structure. So they've really gone above and beyond in terms of showing how these structures can be used for generational wealth planning and asset protection without being burdened by the taxation that wasn't intended to affect these structures to begin with.
Jimmy, just to add that. So, are you using DIFC Foundation from a U.S. tax perspective as a foreign grantor trust qualified?
Yes. So, I have used DIFC Foundations as U.S. grantor trusts. I've also used them as U.S. non-grantor trusts. We use DIFC Foundations. I've used RAC ICC and ADGM as well, but typically we use DIFC. Not just, typical situations like the foreign non-grantor trust, right, is you have one parent that's not a U.S. person and has the wealth. You have one parent that is a U.S. person, therefore the kids are the U.S. people, and then we obviously use this for the estate planning, and we do this with DIFC Foundations all the time.